Welcome to episode 41 of The 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week, we bring one stock, one headline, and one reason investors should care.
This week, we're talking about Shopify and Monument Mining, a pair of stocks with ample data suggesting they could benefit from the Santa Claus rally and carry momentum into 2026 and beyond.
As the holiday lights sparkle, Shopify, SHOP on the TSX, is riding the wave of the Santa Claus rally. Could this festive surge be a gift that keeps on giving for investors?
All right, John, from the broadest perspective, what's the story here?
Well, Trevor, this Ottawa-based e-commerce giant is a high-momentum growth stock that powers millions of businesses. I'm sure you've heard of them. It drives consistent revenue growth, and it recently showed strong fundamentals after a brief dip.
Interesting. Okay. But when it comes to the individual investor, exactly how should they conceptualize what Shopify has to offer?
With Shopify, we have a robust upside potential here as sentiment tends to shift. Its performance often reflects broader trends in online retail and consumer spending. That can make it a key indicator for tech and growth-focused portfolios as well.
I got you. Having established such strong potential, though, I'm curious, how has the stock reacted?
The Shop stock is up more than 45% since the year began. It's also 35% higher than it was this time last year when we had the previous holiday season. It's also worth noting, I've been looking into this a bit, and its stock has also saw a bump from late November 2024 to early January 2025. And we are seeing another better bump right now compared to last year. Shop stock recently fell from its all-time high back in October of 2025. So while it builds its stock back up, you could look at this as a potential buying opportunity right now.
I got to ask, John, what exactly knocked Shopify off its peak?
Funny you should ask. Shopify's drop-off happened right after the company released its Q3 2025 results, which were pretty impressive. $2 billion US in total revenue earned in the quarter. That was a 32% growth year over year. Good, but apparently not great in the eyes of investors, considering its lofty valuation in the broader tech sector slump at the time. The company also posted 31% growth in Q2. Both results were just shy of market expectations, especially given that its valuation is multiple times near its highest levels since the COVID era. But even so, Shopify beat its sales growth forecast, maintained strong free cash flow during Q3, and even raised its outlook for Q4.
One more for you, John. Black Friday is, of course, a huge time for retailers, so I'm wondering, how did Shopify perform?
Shopify reported its merchants achieved a record $14.6 billion US in sales over the Black Friday to Cyber Monday weekend. That's up 27% from last year. Companies said nearly 95,000 merchants had their highest selling day ever over that weekend. So as Shopify wraps up its holiday momentum, let's shift gears from e-commerce to the earth itself. Monument Mining, where the glitter isn't just in gift boxes, but deep in the ground.
Indeed, John. My stock this week, tracking gold producer Monument Mining, ticker MMY on the Venture Exchange, allows investors to potentially benefit from the Santa Claus rally by aligning themselves with a company in the midst of a robust, data-driven growth cycle, likely to continue well after the elves pack it up for the year.
Santa Claus and mining, not two things I see going together often. What's the context behind this?
Let me tell you, John, gold is sitting near a record high at the moment, over $4,200 per ounce, adding about 130% since 2020. And this opens the door for mining companies to generate leverage beyond this record price through positive news flow, which should allow investors, if they're smart enough, to capitalize on it.
So I see why it has the appeal for gold investors, but why would this matter for the investing community at large?
Simply put, the company has delivered, reaching numerous milestones over the past few years. This includes growing gold production from its Selinsing mine in Malaysia by 6x, from just over 2,000 ounces in Q1 2023 to more than 12,000 ounces in Q3 2025, posting net income of $45 million US over the trailing 12 months. This proves leadership's ability to build cash flow during gold's recent exponential rise.
Whoa, so has the stock moved in line with these impressive results?
It has, no surprise. Monument Mining's returns have actually been spectacular, posting a 275% gain year over year, rising to over 1,200% since 2020, reflecting the company's history of diligent development.
Given the Monument performance is tied to the gold price, what is the consensus on gold demand moving forward?
Well, forecasts will, of course, vary widely, but top institutions are bullish on gold over the next few years. One example is CIBC Capital Markets, which expects continued growth into 2027, touching $4,500 per ounce.
As always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with Shopify and Monument Mining and is intended for informational purposes only. For full disclaimer information, visit themarketonline.ca/disclaimer.